Good afternoon. Today is Friday, May the 19th. The time right now in Singapore is 11+1 in the past 1 in the afternoon. Let's do a bit of recap as to what happened on Wall Street overnight. We can see that prices in equities are basically rallying. Yesterday we have a news update as far as a negotiation between the White House and the House of Representatives as far as the debt ceiling negotiation goes. There seems to be a bit of progress, so much so that they are pushing a bill to be voted this weekend, and that gives the market confidence that they are already progressed, although there's no details as to what has been agreed upon, and we will have to see whether they get passed this weekend. And because weekend have no market, so we have to be very careful. The market right now is very buoyant, very optimistic, so you can see equity prices rallying. But there is a catch here, is that if there should not if the bill should for some reason not pass, then it's going to be all negative. So be careful about holding position over this weekend itself. And in fact, from here onwards, if you if you can afford it, try not to hold position over the weekend, because it is very dicey. We're going to enter a period of very high volatility here, so there is a little bit of concern here. So right now, based on what we can see on the chart here, yesterday the Dow Jones itself actually went back into this bracket of prices, which I said previously in yesterday's update, that the area between 33,185 to 33,240 is a good area to consider buying. And true enough, the market actually went into this bracket and actually traded to a low of 33,212 before it rallied. So the high yesterday was 33,580 thereabout, and this is setting the stage for further rally towards to challenge the month high at 34,257.8, and which is not far from the year high at 34,342.3. So basically this will be the near-term target, and if there's going to be an agreement, the market should quickly challenge this level, and we will have to see whether it can actually trade beyond this barrier. Whereas the S&P 500 is a lot more positive. You can see that as far as the S&P is concerned, we can see right now we are at the year's high of 4,202.2 last night, and this is setting the stage for further extension into this bracket of prices, somewhere to challenge last August high, which is at 4,325.3. So this bracket, which I consider to be where you should be talking, quite ideal for profit taking, is between 4,240 to 4,342. So this area is where you want to watch for selling signal here. Okay, not so much as to sell right now. If you are really long, this will be a great area to consider taking some money off the table. Okay, whereas the Nasdaq, needless to say, the Nasdaq has been the most bullish. Yesterday we had a move to 13,844.7, which is very positive looking. Looks at the market has already taken out last August high, which is 13,721. Now the market is probably gunning for this bracket of prices, which I think it may seriously meet some selling interest here. Meaning to say that the market has been going up all this time this year. So at 14,136 to 14,712, this will be an area which we may see profit taking occur. Okay, so there is going to be a little bit more room to the upside, but not by very much. Whereas in the Asia itself, we can see the Hang Seng actually broke the barrier to lower prices. We can see the market has been basically holding out at 19,500 thereabout, and this morning we have a breach as low as 19,352.8, and this has clearly signaled to us that the market has resolved itself, because previously I was mentioning the market is caught between a range, and the range has been very well defined at 19,500 to the bottom and about 20,320 to the upside. So the market has decided to trade to the downside. So now the market is vulnerable for further losses. And if that's the case, it won't be a surprise that the market continue to edge lower to challenge the March low at 18,830. Okay. Over the Nikkei, we can see Nikkei is at a high 30,924.57 this morning, and this is the highest since 1990. So this is something of a benchmark right now. The market may actually extend all the way to 31,600 before it comes under profit taking. So for the time being, this is very likely to extend higher. Okay, so this is something that you have to watch. And over in the mainland, we can see that prices are also testing the lower end of the range, while the Hang Seng has truly broken the consolidation range. The CSI 300, which is a major Chinese equity index, has yet to do so. The low traded this morning was 3,928, which is marginally above the low here traded in April, which is 3,925. So again, you can see that it is testing, and this is the third time he has tested this round. So anytime now, if you cannot hold, it will probably break, just like what we saw in the Hang Seng. Okay, and over in energy market, you can see that the WTI, which is the West Texas Intermediate crude oil, basically right now is ranging. The high traded on Wednesday was $73.21. So there is a very good chance the market may continue to consolidate. Ideally, we want to see prices pull back to somewhere around $68.76 to as low as $67.51. And that will be a great area to pick up some long position, because I think the market is getting ready to rally as well. And it will not be beyond the market to actually break above the month high, which is currently at $76.07 towards the $83. The mid-range of $83, which is somewhere here. Okay, so you can see that this market itself has actually taken out the April high at one stage. Okay, and we want to see whether it can actually go even further. Okay, now over in the gold market, we can see that because dollar was very strong last night, and that caused precious metal to actually decline, and the market has gone to a bracket of price which I've highlighted many times, which I think is going to be an area in which buying interest may actually emerge. The $1,952, which was yesterday night low, is very close to this price that I keep on mentioning, which is the point of origin before the market went to the all-time high of $2,081.50. So the market have a three-wave pullback into this bracket of prices, challenging, testing the point of origin. I think the market is getting ready to rally. Okay, so if you are really short, do take profit. I have taken profit. So basically, my short position I exit yesterday. Although I exit as a marginally higher price, because I exit at $1,966. So anyway, it makes no difference. A profit is a profit. And now I think the market is getting ready for the possibility of resuming its uptrend. So do watch out. So for this to happen, what scenario can cause precious metal to rally or to basically explode to the upside? It is definitely due. It could be due to the failure to pass through the bill that we had just mentioned earlier on, that whether the debt ceiling can be resolved over this weekend. So do expect, based on the prices in precious metals, if we do get a surge in metal prices, that means to say the bill may not get passed through Congress this weekend. So that is building up to be a possibility here. We will see by Monday, we will know. Okay, so over in silver, we can see that silver prices has stopped falling. The low traded was $23.33, which was traded on Wednesday. On Wednesday. So we can see, is it Thursday? Sorry, on Thursday. So we can see that prices now is within this bracket of prices, which again I have highlighted previously, at $23 to $23.73 is ideal for buying. So if you're already short, make sure you take profit and then get ready to trade to the upside. Okay, so this will be a great chance to actually buy some silver position, because I have noticed all the while that this year silver has largely outperformed gold. So if you are not comfortable buying gold, look for buying signal in silver instead. Okay, a dollar has been rallying. Like I say, the reason why precious metal has been falling last night was because dollar was very strong, and this strength in dollar actually even surprised me. Market went up to a high of 103.50 thereabout. Okay, and it may continue to charge higher, but before that, I think there's a decent chance it will pull back. So if it pull back marginally to test 102.86 to 102.8, 102.70, that will be a great level to buy some more, because I think there will be one more leg to see the market go beyond maybe the 105 levels. Okay, so we will have to see how the market reacts, but I think there's a good possibility we are seeing a very robust five-wave, what we call a potential five-wave rally here. Okay, so this could be a 1, 2, 3, part of a 3, and if we get a pullback here, to be a fourth, and then possibly followed by another challenge to the upside, targeting possibly 105. Okay, over in the other currency pair, we can see there's a dollar edge higher. All the other currencies basically fell. Okay, in correspondingly speaking, so we can see the low traded in sterling was 123.90 yesterday, and it has basically been around these levels. Very little rally, but if you get a counter trend rally, a good place to consider to sell will be at 125.30 to 125.70 levels. But again, it may not happen. Okay, so if that's the case, market may extend all the way to test the April low, which is at 122.75. Okay, over in the Aussie itself, Aussie have a bit of a pullback this morning. So last night it traded to test the May low, break it very marginally at 0.66048. Okay, the low previously was 0.6605. So we can say the market actually took up by 2 pips. Okay, and then basically rebound. So if this rebound can sustain a little bit more, ideal place to sell will be at 0.6712 to 6737. Okay, where if it goes up that far. If it cannot, then maybe the market will continue to edge lower to challenge both the April and the March low. Both levels are at 0.6575 to 0.6565. Okay, so watch out for these two levels here. Over in the euro versus the dollar, we see very little, if not no rebound at all. So the last rebound was back into 108.90 levels. So this time around, whether it can rebound back to this level remains to be seen. So far, it is not looking good. Okay, so far the market has already taken out the April low. So this is even weaker than the sterling pair. Okay, so as far as the currency is concerned, euro right now is one of the weakest going forward. Okay, so market has already taken out the April low at 1.0788 to with a new low at 107.60 overnight. Dollar yen was a lot stronger than expected. I was thinking maybe the market would have peaked, but the market continued to charge higher to 138.75. So this call for a relook at the bearish scenario. Although the market may still want to come down at some point in time, but for now the market may extend all the way to test the December high, which is 139.85, and may even trade all the way to 140.65 to 142.35 levels. This will be a great area for profit taking if you are already long, and then if you are not, then looking for a chance to get back in, then maybe this area here will provide some kind of selling opportunity, but again on the condition that you see a reversal signal. Okay, and over in dollar Canadian is a little bit of a struggle here. We can see the market has been trading, basically trying to find a direction. Market has been rebounding, so whether the rebound is over, we do not know for now. So as far as you are concerned, if the market can actually trade a little bit higher back to test the 135.50 levels, I think that will be a great level to consider short, and I think the market can go all the way down to take out the March low at 133.15 levels and maybe even lower. Okay, now over in Bitcoin, we can see Bitcoin basically actually edged lower to a trade to 26,374 overnight before it bounced back. So this is a little bit lower than what I was expecting the market to pull back to. Originally, I was thinking maybe the market can pull back to 26,513 or 26,733, but so it managed to go a little bit lower, but not very much, and the market is now stabilized. Overall, I do believe that the Bitcoin is getting ready to rally, okay, big time. Okay, so that could only happen again when you look at how the charts are lining up for a rally in both the precious metal as well as in Bitcoin. It would suggest that the debt ceiling negotiation will not go very well. So that is laying the stage for a major spike in volatility, and for Bitcoin and those what I call that risk off asset. I think that will be something to look at. For the time being, this is all I have for you. You have a great weekend again, and I shall see you on Monday. Bye bye. Take care.